Hi, this is Vijay Bambani. I'm back with you again, still recording videos from my residence. I hope you're taking very good care of yourself and your family, you're staying indoors, keeping yourself safe, and also, like I've said in so many other videos, keeping your finger on the pulse of the markets so that you're staying in touch with the trends. In today's video, I have A question to ask you, B, also answer that same question and guide you along what you must do once the markets slowly but surely, as they inevitably will, limp back to normal. In my earlier video, I had recorded sound bites about what indications the markets will give you, laying out specifications of all four asset classes of what signals they would send out individually. We talked about currencies, the largest market in the world by turnover, the bond market, the commodities market, and then the equity market, which is the smallest by way of turnover. Now, in order that all the markets were to basically get out of this state of shock that they are right now, thanks to the corona problem, what do we need to watch out for? Now let's narrow down our focus to the commodity markets. What would the commodity markets need to tell us before we can actually pop a bottle of champagne and raise a toast and say, okay, the worst is put behind us? I've already recorded in that video the fact that gold and silver need to either stabilize or show signs of not showing any kind of a sign of runaway rallies. Runaway rallies in gold and silver are basically indications of fear, of panic, and possibly lethargy in other asset classes and very poor return on investments in other asset classes. So number one, these fear commodities. I'm not saying this negatively. I'm bullish on gold and silver, but what I am talking about is a very dispassionate view about how the commodity markets need to indicate where the markets really need to go. So gold and silver must stop the runaway rally that they have shown since June of last year. More importantly, what I think will come to the center stage are industrial metals. These might actually hold the key to discerning where the trends are likely to be headed. Let me explain. Industrial metals are not something that you would hold. Gold and silver, sure, you might hire a locker in a bank, or you might want to keep it in the vault in your own residence, whatnot. These are greed commodities, gold and silver. But copper, aluminium, lead, nickel, zinc, you don't really feel like storing blocks and blocks of them in your cupboard or in your home safe, do you? You will buy them only when you need them. And you'll use them for industrial activity, for production, for producing goods. What I need to do is go out there and start monitoring the consumption. The inventory figures, as you all must be aware, I'm sure there's a separate video in this topic by itself. The inventory figures are not really very tough to get, even though they may not be really laser precise, but you know how much the world is producing of copper, nickel, zinc, lead, aluminium, etc. What we need to do is basically keep our ears to the ground and monitor the offtake. The higher the offtake, and remember these are not greed commodities, these are consumption commodities, the higher the offtake, the more I will come to the conclusion that the world's factories are humming back to life. If they are humming back to life, it will be assumed that industrial activity is picking up, and maybe within a quarter, if not less, the financial markets will simply take off. This is a hypothesis that I have used in the market for more than a decade and a half, and it stood the test of time. Whenever consumption of industrial metals has shown significant upticks, corporate turnovers and also profitability have seen improvement, and it's always lead to cheers in the stock, commodity, currency and bond markets. So whether you're interested in lead, crude, copper, aluminium, zinc or not, you will have to monitor. These assets may not interest you, you need not trade in them, that's fine. But even if you're only an equity or a bond investor or a currency trader, you must cultivate what I call the 360-degree view. Take a look at all asset classes, do not narrow down your vision, do not suffer from tunnel vision, and do not think that any other market's problems are not your problems. Before you know it, they will become your problems. So keep your ears to the ground and monitor these base metals. Uninteresting as you might think they would be, they can actually make you a lot of money from other asset classes. And of course, if there's anything meaningful to update on this front, I assure you, I will record a video on that front. Before I sign off from this video, let me remind you to click like on this video if you're watching it on YouTube. In the comment section, do let me know what you think of this video and what other videos you would want me to record in the future. Also, please do not forget to refer this video to your family and friends and help me spread the cult of knowledge-based investing and trading. Also, may I remind you to join Equity Master on their Telegram channel, the handle of which is Equity Master Official. I post a couple of videos, posts and articles every day, Monday to Friday, and I would love it if you could read them. This is Vijay Bambwani signing off for now till we meet again in my next video. Do take very good care of your investments and trades and take care. Thank you.
Also, do not forget to subscribe to my free email newsletter, Fast Profits Daily, and get my free guide, How to Trade Markets Like a Pro.